following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to take a look here at the German DAX and also the FTSE. As you can see, they are making some nice patterns. The FTSE, of course, is a little lower. It's in a still in a consolidation period. The DAX is making a topping type pattern. And remember, these patterns are for prediction only, folks. They're never 100%. You've got to remember that without any hesitation. One of the questions that was posed to me last night via email was, when did I decide to be a professional trader? It was February 1975. I'd been with Eli Lilly for 10 years. And February of 75 was not one of the good times for me, folks, because I had just wiped out everything in October of 74, and I was in the study process. But I knew I just couldn't go on anymore. I had vested interest now in Lilly, and I went, my boss was coming out to visit me, and when I met him at the airport, we stopped and had breakfast, and I handed him a little set of keys, little brass keys. And he says, "What's this?" And I said, "Those are the keys to the golden handcuffs, Ed." I said, I've got to move on." He said, "Yeah." He said, "I figured it was going to happen someday." And he asked me what I was going to do. And he said, "Well, keep me in the loop." And of course I did. And we ended up making a lot of money in beans. But that's how I started. I started at a time that was really tough on me because, I wasn't poor. I had a lot of, assets. I just didn't have any trading capital. I took care of that over a period of time. But that's how I did it. I basically did it. And, I decided I knew I could do it. The thing that turned me around, folks, is when I lost all that money and I went back to Terre Haute, Indiana, and then went down to Bloomington to visit. Well, he was down at the University of Kentucky at that time. I went down to Lexington, and I asked Jim. I said, "Well, Jim, what do I do now?" And he laughed at me. And he said, "Ha, ha, ha." He says, well, in a jovial laugh, he said, "Well, now all you have to do," he said, "your answers are right there in front of you." And I says, "What do you mean?" He said, "You have all your P&S statements. Go back and see what you did wrong. You know what you did wrong." And I did. I was adding to losing positions. I wasn't using stops. There was no money management. Once I corrected that, a little bit better. All right, we're going to take a trip down memory lane in just a moment. But by the way, Stan Harley will be our guest at the break, as I mentioned. And as you'll recall here, last week I posted this chart of the TLT to be ready for this because it was going to most probably be coming in here very, very shortly. And today, very, very shortly, has arrived. If we take a look here at this TLT, and if I can just get it up here for just a second here, it's coming. Hold on. You'll see that today we have made that number right up here, spot on at 4,200, and we're a little bit lower than that right now. That completes a double ABCD, folks. And you got to be very, very careful of that one because it could really be a nasty one. If we look here at the Treasury notes, and all the news today is, gosh, rates are dropping, hallelujah. Well, hallelujah is also a way of saying goodbye. Anyway, if you'll take a look here on this Treasury notes, you're going to see a 135 pattern on the downside. So that's very important. Now, if we make new highs now tomorrow in the TLT or the Treasury notes, then this is a failed pattern. And, it's probably going to see lower rates for a while. We're not going to zero rates. That's not going to happen in my lifetime. Well, I don't think so. What do I know? Anyway, that's what we're watching to see. Look, now let's go through memory lane here, folks. We're going to go back here to 2012, and we're going to take a look at Bitcoin. I'm going to go through these one by one, not because I'm involved in Bitcoin in any way. I'm just showing you that these patterns repeat and repeat and repeat on everything, especially anything that is into the public domain, which of course this is. You'll notice here that the market went from $260 per coin all the way down to $45 a coin, an 80% correction. Okay, that was 2000. I'm going to do these one at a time so that you can see that these actually occurred. And by the way, I really appreciate the fellow, our friend over in Denmark, that sent me all this information, because it's really important. Here was a second one. We went from $1,150 a coin all the way down to $150 a coin, another 80% correction. Remember, you think this isn't wild, boys and girls, but what is it doing? It's telling you that something's there. It's repeating itself, over and over again. So remind ourselves. Okay, here was another one right here. This was 2018. We'll get this one up here and take a look at it. You'll be able to see it. Here it is. And we went from, from 20,000 all the way down to, wow, I can't believe that's right, 3,100. And that was an 80% correction. And from there, folks, we went to 65,000. So you can't tell me that there's not something going on in that market. I don't know a lot about it, but that's enough to keep me involved for what's going on right here. And also, here was the one from, this was the other one that had occurred right before that last big run-up. You'll be able to see that 2021 at 36,000. So those are some of the things that you got to think about, because these things repeat over and over again, and you've got to be prepared to see what you're doing. Now, here is the last one we're going to share with you in this group, and that is where we are right now. And you'll notice here that the 80% correction is going to come in here just about 22,500 if we get there. We're at 33,000 today. Soon as we go below 30,000, folks, get ready for 20,200, because that'll be another 80% correction. That will be the fifth one. Now, if the fifth one fails and that thing falls out of bed and we get below 15,000 or something like that, then there's big trouble, and there's probably going to be more talk about maybe this stuff is baloney or whatever it happens to be, whatever kind of sandwich you like, PBJ or whatever it happens to be. So those are a couple of things that we have to pay attention to today. The Treasury bonds, I thought, offered some really great selling opportunities today up at that 159 level. We've sold off about 20 pips, not too much, but very interesting, some of the patterns that we have going on here today. Now, I would like to mention to you this one right here, that is the Apple, because we are knocking on the door, folks, of a potential turn in Apple. We've been as high as 128.30, and the last time I checked, Apple was trading around 127 and change. If we can get above that high that we made yesterday at 128.20, that's a 38% retracement of the contract high back in 29th of April. And if we get above that, that tells me this stock's going to at least 132 and maybe even higher. But it's got to get above that. Until it does that, it doesn't really mean very much. The same thing with Tesla. If you take a look here at Tesla, same thing. We had that bearish pattern. The market broke down to the 78% rally area, rode up to the 78% level yesterday at 626, and if we get it above 636, you're going to be looking at a $700 number, and maybe that'll turn the whole market. It could certainly do it, but these are critical levels that we're seeing in all of these right now, so it's important to watch those. It's 2705. Thank you, Danny. I appreciate the help. How about Tesla? Well, it should be around 605 or something like that. That'd be my guess. Don't think it's that strong today, but it's a little better than what it's been going on at. So if you have any questions, folks, it's 877-927-6648. We'll be right back.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500-plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the pattern for the Russell. What's interesting about the Russell at today's high, it was one standard deviation beyond the mean, and boy, that's a sign the market is extremely overbought. Whether that means anything or not at that point, I'm not sure, but that's what that happened to be showing. You can also see that it's a beautiful ABCD pattern. Folks, when I show you these patterns and stuff, it's the same stuff day after day, and I hate to make it boring, but that's the only thing I know how to do. If you remember in Curly and City Slickers, one thing, and boy, that's one thing I do is I understand ABCDs. If you want to understand about trading and what's going on with all this stuff with mimification and Reddit and Robinhood, all this stuff, folks, this has happened before. Just get the book Reminiscence of a Stock Operator by Edwin Lefevre. It's the autobiography pretty much of Jesse Livermore. And these, when he talk about the shoeshine boys telling you, giving you tips, or the taxi drivers, this is what we're looking at now, is just the 2021 version of it with the internet, with the telephones and all the other stuff. I mean, that's all it is. I mean, if you think it's any different, you're being very naive. This is what we're looking at. And I don't know if it's 2020 or 2000 when we were at the .com bubble. I said at that time I didn't think we'd ever see a bubble like that again. Maybe this is it. I don't know, but I mean, you stop and think back in those days. I mean, if the phone rang in an office for a potential sale, the stock would double. Now what they're doing is they're jumping on the bandwagon and they're ready. And if you look at those stocks, if you look at GameStop and this new one, Clovid, or even Wendy's, I mean, if you look at some of these, the patterns are right there in front of you. They have to be, because if the public is in there, they're going up and down just like they should. But if you have not read that book, Reminiscences of a Stock Operator, you shouldn't be trading. And I mean that very sincerely, folks. I have read that book a minimum of 50 times. I mean a minimum. And that was part of my homework of learning how to trade again when I didn't really know how to trade. I was just following trends. It was just dumb luck, and dumb luck's what got me out. But, fortunately I stayed with it. And so anyway, if you'll get that book, I really would, let me give you a little guarantee, folks. If you buy the book and don't like it, send me the receipt. I'll pay for it. You keep the book. How's that? You can't lose that one. Can't lose on that one. So that's a great book. It really is. I was fortunate enough to be good friends with Ed Dobson, and Ed had a very good friend, Richard Smitten, who was a friend of the Livermore family, and they wrote a couple books about Jesse Livermore and his life and everything. And he did kill himself at the Roosevelt Hotel in 1941, but he actually did not. He wasn't bankrupt. He had a lot of assets. He just his account was bankrupt. He didn't have any money in his trading account. And we have a caller coming in now, and Mr. Z is asking, do I see a top coming in crude oil? Well, today we had a very interesting one because one of our good friends over in Malaysia sent us a really neat little pattern showing the resistance between 70.50 and 7100, looking at several different ratios. I didn't save the chart, but at that level, it offered very, very small risk for entering a short position because this is what the patterns are about. It's about risk control, and that one made well over $1,300, and it, still been dropping. So that's all it was. It was just an expansion of those numbers, and those are the things that I look at, to try to find, situations that look pretty good. Now, we've had a nice move in the euro, and I think that move is probably over for the time being. It's booked about somewhere between $700 and $1,100, depending upon when you decided to get out. But that's pretty much completed what we're watching here. The U.S. dollar is at a real critical level, folks. If it breaks down from here, if we get below that 88 level in that U.S. dollar index, that is not going to be a very good sign. I'll put that up here. And you'll be able to see where we are. And, we get below that 89 level, that is going to be trouble in River City, because that on the weekly chart tells us you're looking somewhere around 84, and that would send the euro far south of 125 to 130. So we've got to remember that happens, and you've got to be very, very careful if the dollar does that. Now, we follow the euro because that's the inverse of the U.S. dollar, so that gives us a pretty good chance of looking at it. But today's the key day, folks, and the reason why we know we have the solar eclipse tomorrow, and our guest tomorrow will be none other than Tim Bost. Today is Stan Harley, and Stan's got a big surprise for you, folks. If you're bullish, you're going to be surprised. And if you're bearish, you're going to be surprised. But it even surprised me when I talked to him. So it's going to be fun to listen to what he has to say, because he's got a great track record and has some really good research that he's going to be able to share with us. The whole secret, folks, of learning how to trade is you got to understand the man in the mirror yourself, that 9-inch cycle from the left ear to the right ear. If you get that right, the rest of it is pretty doggone easy. So that's the key to remembering that's what we're looking at as we look at some of these patterns unfold over these next few days for sure. We have one other question, and that was about the stock of General Motors. I don't have any clue on it, folks. I drive a General Motors car, but frankly, I don't look at General Motors, and I tried pulling it up, and I don't even have data for it. So I apologize for that. I'll try to get it after the break or have one for you tomorrow, but I don't have anything with General Motors. All I know is that the used car market is incredibly hot. I mean, when the dealers call you asking you to buy your car, you know something's wrong. So I don't know what that means, but it's very, very unusual to see this stuff. We'll watch it as we go through here and look at some of these other patterns. I wanted to bring to your attention, of course, here the gold market, because we've had a really nice moving here gold here recently. We've definitely validated that the 78% level back there at that 1919 is good. The rally that we made on Monday, right at the 78% level, was at 1906, and we matched that yesterday at 1906, went all the way down to 1887. And then we backed up to 1901 and then back to 1992 again. So this market is now consolidating. So we know that high is in. It's going to give us some really good patterns to be both a buyer and a seller. But not today. Today's the day you want to let this thing settle up. And the reason why is this is a big cycle that we have looking at this solar eclipse and new moon that's coming in. That's one of those 14-day cycles that we do watch. And that's what we're doing. You don't have to call it solar or anything. You just look at it as a 14-day cycle, because that's what it is. And then you don't have to be worried about the people wondering whether you're smoking something weird or doing something else. It's just nothing more than that 14-day cycle. But what you have to do is you've got to line up the place where you want to enter the trade, and that's where the patterns and the ratios come in. The patterns and the ratio are the ultimate key because time is so elusive. As Gann said, it's the most difficult thing you can possibly find. That's it. Ruby's saying if you take the Bitcoin, change on Bitcoin. No, this 11% bounce is nothing, Ruby. That's just an oversold bounce. That's 11% in a $30,000 stock anymore is nothing. No, if it gets above 43, then I would say, maybe there's something wrong. I still think we're heading to 22,200. That's what my goal is. I'm assuming that's what it's going to get to. But again, I'm wrong. But this is nothing more than an oversold bounce. And the whole world yesterday was hammering Bitcoin so bad on the news, it was just a matter of time before it rallied. I mean, they were just bouncing off the bottoms. 877-927-6648. Stay tuned for Stan the Man Harley. We'll be right back.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're having a little difficulty getting in touch with Stan, so hopefully he'll get back to us as soon as he possibly can. I'm not going to show his charts because they are so they're just absolutely so spot on that I really think it's great. Now, if something happens that we can't get him on today, I'll try to get him on Friday. But hopefully we'll get him sometime this morning. But he's got some beautiful technical pictures. Of course, it's all technical, has nothing to do with fundamentals. Folks, when I first started, hold on second here. I think we got the man is in the house now. Stan, are you there?
I am indeed, sir.
We are all ready, my friend, and your first chart of the SPX is up. I told the folks, Stan, I told the folks to not be surprised about what you were going to say, because you've been bullish since Hector was a pup, and that dog's 11 years old now. So tell us what you're looking at, my friend.
Larry, I've been bullish, for the most part, since last October, the end of October, through the present time. For the last couple of months, though, on the air with you, in fact, I've been suggesting that the time period around June 9th, June 10th would be the time period to monitor for what I thought would be an important cycle high. I call it a primary cycle high in the stock market. The primary cycle is the dominant cycle on the charts for the time period of less than 1 year, and I found that over time it spans nominally about 34 weeks, approximately 8 months, and that those two numbers are Fibonacci numbers is probably no accident. But as you can see here from the late October bottom, as you can see on the screen, we've seen 4 distinct smaller, what I call trading cycles within the context of this 34-week, 8-month primary cycle. And that's fairly normal. We usually see 4 trading cycles that tend to average right around 40 trading days, although you rarely see any trading cycle that's exactly 40. But going back over the long haul, each of those trading cycles tends to average about 40 trading days. And I've numbered them 1, 2, 3, 4. And because of the phenomenon of right translation, we typically peak out in either the 3rd trading cycle or the 4th trading cycle. In the previous primary cycle, by the way, that went from March 23rd, 2020 to October 30th, 2020, that cycle peaked out on September the 2nd. You can see over there to the left of the chart. And that was in the 3rd trading cycle. So we have to be prepared for a peak somewhere either in the 3rd or the 4th. Now, having said that, cycle tops are different from bottoms. That is to say, bottoms typically are just one and done. That's it. Maybe a retest, maybe not. But tops tend to be evolutionary. That is to say, we tend to see different stocks, different indices top out along the way within that 3rd or 4th trading cycle. And Larry, that's exactly what we're seeing develop right now.
Stan, we've got a question from Mr. Z in the room. He's a very experienced trader, been around for a very long time. He's wondering, have you ever worked with PQ Wall out of New Orleans?
I am familiar with PQ Wall, but I do not know him personally, have never communicated with him.
Yeah. I don't know if he's still alive or not. I really don't. I know he's a really smart guy. He's in the genius quality. He's just very, very bright. A little hard to get along with sometimes because he's so opinionated on things, but he's a very, very bright fellow and incredibly, really fun to listen to speaking. So he was asking that question. That's all. Actually, Z, I can tell you right now, I've known Stan for a long time. Stan is self-taught. He's been doing this forever. So he's basically learned from the cycle stuff and has gone from there. And that's where he picked it all up, wasn't it, Stan, through the cycle program and the Hearst book and stuff?
Yes, indeed. And living out on the West Coast for many, many years, which is a repository for a lot of people who've done some very original and quality work. And you and I were, of course, involved with the Foundation for the Study of Cycles. I could be wrong here. I think Mr. Wall passed away. And if I'm wrong, don't come after me. But I believe he passed away a few years ago. But certainly in the genius category, I mean, those two names, PQ Wall, Larry Pesavento. I mean, they're the top of the list.
Stop the music. No. Larry hasn't died, folks. I'm here. I almost cut my finger off yesterday, but I missed that. No, I'm not going anywhere. No. They have my reservation is still outstanding. No. And I'm certainly not in a genius quality, man. I've learned too hard. I got the school of hard knocks on my head,
Larry. But back to the divergences we were talking about. I just want to note that the Dow Industrials thus far have seen their peak on May the 10th. The Dow Transports also saw their high back on May the 10th. The S&P cash thus far saw its peak on May the 7th. And the New York Composite thus far peaked out just a few days ago on the 7th of June. Those five are what I call the big five. And Larry, I look for the interplay among all of them. I want to see either confirmations or divergences. In a healthy bull move, we tend to see all five of those making new highs together, or in a declining environment, all five making new lows. But typically at tops, we will see one or more of those start topping out early on. So when you get to the final cycle top, maybe only one or two of those goes to new highs. And that's what I see developing right now in the present. I mean, as it
just
right
found
now.
out that Mr. Wall passed away in 2009, Stan. So
I thought I recalled hearing that.
Yes. Folks, I met Stan, 40 years ago, I guess. We used to have those meetings on Tuesday or Wednesday nights in the LA area where the technicians would all get together, the guys that were trading at Conti and at Clayton, and there'd be 20 or 30 of us sometimes that would get and share information. That was fun. And that was the whole start of your letter, wasn't it, because of all that kind of stuff?
Back in the day, yes, indeed. Yes,
wow.
Indeed. Fun times for
fun.
sure.
Yeah, there were pretty smart people in that group, that's for sure. Stan, we have another question for one of our listeners. How would a person go to start studying cycles?
Ooh, that's a tall order.
Give me a lifetime and you'll have your answer.
A serious question, though. What I would suggest that any trader do that has an interest in cycles is, first of all, print out charts on a piece of paper. Start with yearly, then monthly, then daily, then weekly. Then top down. And then with a pencil and a ruler, see if one can visually spot recurring intervals. And lows would be better to start out with. Lows are more regular than our highs. Highs tend to bounce around because of left and right translation. But one will find over time that, yes, indeed, cycle lows do occur at a fairly regular beat. Not always exactly the same number, but within some modicum amount of tolerance. Yes, indeed, you will see recurring events on the charts. And one can use that as a forward predictive tool, recognizing there's going to be some kind of variance in the future.
One of our brain trusts here at the TFNN just came out with a great idea to learn how to do cycles. Subscribe to Stan's letter. Very good. Very good. That's a very good one. That's good. You have two questions. We're going to have a break coming up here, but we'd like to ask you, do you follow the cryptocurrencies at all? Are you looking at those on a cyclical basis at any? I
have done some work with them, yes.
Okay. We'll take a little break here, folks. With Stan Harley, the Harley Stock Market Letter. We'll be right back. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
We're back with Stan Harley, folks. And Stan, we've got one other chart, and then I've got a couple of questions from folks. Do you want to do the questions first?
Second chart, Larry.
Okay, there's the chart. There's your S&P large cap index chart, was showing January 9th and 10th. That's pretty close to today.
Pretty close to today, indeed.
Yeah.
When it comes up on the screen momentarily here, we'll be able to see it.
Okay.
What I've done in this chart, Larry, is I have put vertical lines at each of the trading cycle highs since that late October bottom of last year. So I put a vertical line. There we go. There it is right there. I'll put a vertical line at the January 26th high, a vertical line at the February 16th high, a high at the March 17th, and then a high May 7th. And what I've done is I've looked at those highs and I've looked at the time counts and the interplay among them, and I found a perfect Fibonacci relationship defining all of those highs. Wow. So if we start measuring forward from the first trading cycle high, January 26th, all the way through the present, we can do a technique which I call regression modeling. And if we scroll down to the bottom of that of the page that I sent you, you can see the regression analysis that I've done. And for those who are very familiar with statistical analysis, one will understand that one can insert a data point and then find the best fit from a mathematical perspective. And then we can use that then as a forward predictive tool to assess in the future when the next turning point is likely to occur. And that's what I've done here. And we have just a beautiful 0.146, 0.382, 0.764 Fibonacci relationship with a standard deviation of less than 1 day. There it is right there, which is in an R-squared level of 0.9997, 1.0 would be a perfect fit. What that suggests, Larry, is the mathematics would suggest we should be looking to June 10th, plus or minus a day or two, for the next turn in this series. Well, today's the 9th. And I believe we're probably going to see a high in the S&P 500 here, if not today, tomorrow, certainly by the end of the week.
Wow. We have a caller from Jeff from Philadelphia. Jeff, are you there?
I am, yes. Hi, Larry. How are you?
Fine. Go ahead and ask Dan your question.
Yes. Hi, Mr. Harley. I wanted to ask what your expectations are if we do make this turn after the fourth cycle. What do you think is the most likely move after this
scenario? I think, great question. I think we are poised to make an intermediate cycle high here. Not only is the time count suggestive from looking at the 34-week cycle pattern, we have the Fibonacci relationships that I just showed, and then we have the divergences among the major indices. That's suggestive that a high is nigh. It doesn't mean it must happen, but that's what we as technicians do. We look at everything. We look at the weight of the evidence and assess the probabilities. If we do get a decline, I would look at the weekly chart. Take a look at the weekly chart of the Dow or the S&P or the transports. And I would expect a pullback. A reasonable expectation would be to the 50-week moving average. So that would suggest about, depending on the index, somewhere between a 12, perhaps even as much as a 15% pullback. And it would still be a bull market. We'd still be in a bull market, but we are way, way overextended at present.
Yeah.
Right. Well, that's an amazingly precise answer. Thank you very much.
Yeah.
My pleasure. If you
Thanks
want to
for
get
calling in, Jeff.
a little scared,
I'm sorry?
take a look at if you want to get spooked a little bit, take a look at a monthly chart of the Dow transports and go back about 30 years and look at it. You can see in the last year and a half, we have gone vertical, straight up like a totem pole.
Yeah.
At a steeper rate of ascent than we ever have, that I have ever seen. That's a little frightening. To expect that's
looks like
going
a
to
bubble.
continue at that rate of ascent is asking a lot.
Mm-hmm. Wow, that is something.
Okay, great. Well, I'll free up the line. Thank you very much.
Well, Stan, I've got a question for you. Do you see any relationships here with this Reddit stuff and Robinhood and stuff? These are, to me, it looks just like the Shoeshine Boys from the Jesse Livermore era. I don't see any difference, actually.
Yeah, interesting point. I think your analogy is probably a good one. But the dominant players in that space tend to be the retail people, and they probably will take more risks than, say, the professional money manager. So for that reason, I think you're seeing that kind of a volatility. I think that would be to be expected.
Okay. Finally, we have a question on. We won't ask too much about Bitcoin today because your work's preliminary. But you have a feeling of what the gold market's going to do, Stan?
Metals complex. I think they are going to creep, and I emphasize creep upward, not at a sprint, but move higher nonetheless. I think gold down the road, several months down the road, could very well see a token new high above 2,000. Silver has a long way to go to break out to a new high, but I would like to see silver punch marginally above 30. That would be a good sign for the bullish case.
Yeah, I've been bullish silver since they started mining that stuff back in the days of the Sumerians. Hey, listen, buddy, we want to thank you for being with us, and we're going to have you again in a few weeks. And I hope everything's well, and take care of yourself and be safe, okay? We really enjoy having you, Stan. You get a standing ovation. I know you can't hear it, but there's a standing ovation in the room right now.
You're very kind. Thank you. My pleasure.
No, it's the truth. Thanks. Stan Harley, folks, the Harley Stock Market Letter. Just go in and Google it. And if you want to learn about cycles and find out what the market's been doing, hey, folks, this dude's been bullish since October of last year. And he's telling us today or tomorrow is going to be a high. We got to respect that. And if he's wrong, we'll have him on again in another lifetime. Who knows? Anyway, thanks for being on, Stan. I really appreciate it. Okay, folks, let's move on here for just a second here. We've got the market here. We got a minute to go to the break. Still in the bits of a rally. S&P's up, Dow's up. I'm not sure whether Russell is still up or not. Russell's going to have a little difficult time because of that standard deviation number. That we watch those very, very closely, and we are right at that level today when we hit the 2350 in the Russell. So it's something to watch. Looking at this, we've made a new high in the S&P 500. People don't talk about that too much, but we have made a high. We did that last week on the close, and I believe we followed through. Just a second here, folks. I'm having a tiny bit of technical difficulty. You'll see here we've made either a double top or something possibly in here. If you remember here, we had a double top up here on the 10th of May, which was 28 days ago, so you have a pretty good idea what that might have been. But here we are over this really interesting spot here. But we've made new highs in the S&P by, I think, 20 cents or something. It was very small. And we've also made new highs in the Dow Jones Industrial Average, as I recall, but not in the NASDAQ and not in the S&P futures. The S&P futures, of course, went to 4237. We might make that today or tomorrow, given the fact that we got all these numbers coming out on Thursday or Friday, so that'll be a really interesting one to pay attention to. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, folks, I posted the chart of copper, but before we get to that, I want to remind you folks that David White is doing his program on the 16th of June between 4 to 5, and if you have any interest in options, Mr. Google himself will be there to set it straight. So he's going to do a great show. So if you got, I'm going to be there because I know so little about that stuff, and he's a good person to learn from. Now, this is the copper on a 60-minute chart going back for several months. It topped back on May the 10th. Another big lunar event that we had, of course, we had the 135 pattern. You'll see the first one was 0.618. The second one was 0.786. We went down, we made a double bottom, and over the past 7 trading days, we have made a 382 retracement. The only thing that's going to make copper bullish again is if we can get it above that 462 per pound level. That's 9 cents from where it is right now. Yesterday's high was 456. So if copper is going to be any good at all, it's got to get moving, because anything below 444, folks, is really, really bearish after a 5-day rally that stopped at the 382. We saw that with Tesla. Remember, only Tesla was an 8-day rally. stopping at the 382. So very, very, very good. There's a lot of reports due here these next couple of days. This only being, Wednesday. So we've got the big report, I guess, on Friday, another one tomorrow. So they're going to have some great volatility. But as Stan said, be prepared here, folks. There's a lot of cycle stuff that looks interesting, and we want to be prepared for it if, in fact, is the case. It just happens to be at the same time that we're looking at some of these 14-day lunar events that we watch occasionally as they pop up with the solar eclipse and the new moon that is due on the 10th. So we'll be watching that one very, very closely. Regarding the gold market, I believe we've made some type of a top in gold, but I'm not 100% sure yet. But you know what? I'm never 100% sure, folks. The best you can get is about 75%. And right now, I think there's still a possibility here that we could make another new high, but I've got to give it a little bit more time to see it. So live every day in an attitude of gratitude, and may God bless.